Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Dan Caplinger and Lou Whiteman giving a 1 to 10 rating to the B2B distribution company out of Pittsburgh. It's Wesco International, ticker symbol WCC. We'll talk about the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Dan's at an 8. Lou, you're at a 7.
So I'm a sucker for a good industrial distribution business. Distribution, it just tends to be able to take advantage of economies of scale. You do a better job than manufacturers adjusting to demand, no factories to start up and close, all that. Wesco is a great distribution business. It's a one-stop shop for mostly electrical components. A few years ago, they did a massive deal. They bought out a company called Anixter, which basically doubled their size. They gained the scale they needed. The deal's gone a lot better than expected. I think we're only beginning to see the benefits, so there's a lot of upside from here. Look, the downside is it can be a cyclical industry, and you are limited to just kind of the natural growth of the industry. But long term, I'm very excited about this company.
Yeah, I gave it an 8. I've been looking a little bit more at these industrial distribution, some of the companies in the industrial sector that have been kind of hidden beneath the radar for a lot of folks. In this particular case, Wesco, I think that they made a smart move, emphasizing the communication side of the business as well as the security side. Smart strategic move, tapping into demand for things like data centers, where it's sort of the furthest thing that you might think from basic electrical distribution, and yet it's where a lot of growth is. And so we've seen several companies in this space kind of try to inch their way over and expand their scope. I think Wesco's done a good job of doing that over the past couple of years.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you are at 8s this time, Lou.
Yeah, John Engel is the CEO here. He's been in charge since, I think, 2009. And, he's done a great job converting just what was a sleepy business into a powerhouse in its sector. We like management teams that over-deliver. The deal I mentioned, management promised about $200 million in revenue synergies. They've gotten $2.3 billion. That's good. They've expanded margins 240 basis points since that deal. If there is a knock here, Engel, he is an M&A guy. He's done 30 or so acquisitions. It is central to the story here, but it's also there's a risk with every deal. They're pretty good at it, but he is what he is.
Yeah, don't get confused like I did when we were first talking about Wesco. I got confused with Wesco Financial, which is the company that Charlie Munger used to be the chair of before he passed away. So, no, totally different. Wesco International, totally different company. But John Engel has led the way as CEO here at Wesco for 16 years now, I think, if I'm doing the math right. And just done a good job of charting the course, keeping a good, solid foundation of business, while finding ways to expand into growth opportunities. That's a good balance. I like to see that.
We need like a committee to make sure names don't sound similar. Growing up somewhat near Pittsburgh like I do, and like following Berkshire, it's confusing. All right.
It's probably why this Wesco, they use the all caps. It's sort of like Wesco.
Right. We're shouting here. Exactly. Financials. A 10 is a fortress. A 1 is yikes. Dan's at a 7. Lou, you're at a 6.
So all of that deal making I mentioned, it does weigh on the balance sheet. And we have like $6 billion in debt here. That's a lot of debt. The good news is since that big 2020 deal closed, Wesco has brought down its leverage ratio from 5.7x at the peak to 3. Still more work to be done there, though. The other good news is here, hey, they can do it. This is a good free cash flow generator, 7% free cash flow yield. They've reduced share count by about 5% in the last 3 years and just recently initiated a dividend. I'm not worried about the balance sheet, but when we look at this, it's not really the selling point for why you buy the stock. So a 6.
Anand, I'm confused. I'm usually the one who's a point below my co-host, not the other way around. So
daylight savings time.
This is very confusing for me. Yeah, it must be something like that. Wesco's had that big growth spurt in 2022 thanks to the acquisition. It's been holding its own recently from, looking at most basic financial metrics. Net debt, it's not zero by any means, but it is manageable thanks to that solid cash flow that the company's bringing in. And so I'm comfortable. It's in a good place financially, I think, given the current market environment and given the fact that it is pursuing these new growth opportunities to try to, that I think, they have the potential at least to create a permanent increase in the amount of business that the company is able to do.
right, Dan, let's see if that rosiness extends to your valuation metrics. How well will Wesco stock do over the next 5 years? And how safe is it? 10's a sure thing. 1's a lottery ticket.
So no, it doesn't really extend that far. I'm giving Wesco my usual 5 to 10% range. Safety score is 6, but it's not my usual reason here. Here it is a specific thing. And the thing that I'm looking at is, yes, I think that Wesco made a good strategic move to push into that data center space. It was a huge growth opportunity. And even if it turns out to be kind of a one-time shot in the arm, it was worth pursuing to participate in that. What I question, though, is the staying power of that trend. There are all kinds of people who are very bullish on artificial intelligence, very bullish on the need to build out data infrastructure, communications infrastructure in order to handle the uptick in AI. But we've started to see at least a couple of indications from companies that maybe people are asking more questions about the level of investment involved, whether they're getting a real return on that investment, how quickly that's going to materialize. Even some rumblings of perhaps some big companies cutting back on investing in data centers and other infrastructure related to AI. If that happens, then I think that Wesco's valuation right now, very reasonable. And so it would really kind of take that kind of pullback to prevent Wesco from seeing more multiple expansion and having returns higher than this 5 to 10%. And so if the data center trend continues, then I think maybe 10 to 15% is more in the cards. I'm just not as confident about it as most other investors are right now.
I mean, the point is well taken. I will say I see a well-run operator with industry-leading scale and ties with, yes, data center is a megatrend, but you also have the electrification of autos and other industries. You have grid modernization. I see a lot of megatrends that they could benefit from. Management is bullish on EBITDA margin expansion. I believe them. I like this management team. I think this is a market beater with a caveat that it is a mature cyclical industry. So I'm at 10, 15% market beater, not a to the moon. Safety, this is pretty secure. It's a 7 for me. As long as they don't do anything stupid, there's definitely long-term demand, and I think they can capture it.
Time for everyone's favorite topic. Dan, is there a company in Wesco's space that you like better?
No, I didn't really find one. It's kind of hard to find direct competitors that are doing exactly what Wesco's doing. So finding folks that match up perfectly, not really. I could come up with companies, but they wouldn't really be directly comparable.
Yeah, you're right. It's hard to find someone with the scale and a direct. I'd throw out, though, QXO, ticker QXO. Not sure if it's better and not exactly in Wesco's business, but QXO's serial entrepreneur Brad Jacobs' new venture. It's focused on distributing and rolling up the construction product space. Early days there, a lot more uncertainty, but if they get it right, there's a lot more opportunity for growth. So just, at least for the radar, something else to consider.
Thank you to both Lou and to Dan. They've given Wesco a solid overall score of 7.0 out of 10, with higher scores for the business and management. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is AeroVironment. Till then, Fool on.